What is going on YouTube? It's your boy Dollar Mike and I'm back at it again with another video, another portfolio update for you guys for the month of August of 2022. You guys already know the deal. July, number one, was a great time to be invested in the stock market. We made some great gains and I'll show you guys those great gains as we go through the portfolio and whatnot. So all good stuff to go there. I'll also have the dividend video coming that'll probably come out before this video. And yeah, all good stuff to go there. Regardless, the stock market, you guys already know, for the first half of this year was pretty rough. It was down pretty much for the entire first half of this year. So I'm pretty happy just to see some positive stuff. I'm pretty happy to see my portfolio go up instead of going down for 6 years or 6 months straight. 6 years would be crazy. Either way, I'm not going to waste any more time talking about all that nonsense. So let's get right into the video. Let's go for the portfolio update for August of 2022. I'm all set if you are, so let's get right into the portfolio. We got the Robinhood app right here. We're going to open this on up, Face ID, and we are in. So before we even jump in, you guys already know this is a dividend, pretty much a dividend and growth portfolio. So I invest in dividend stocks as well as growth stocks that I personally like in my particular portfolio. I have other portfolios as well, so if you're interested in those portfolios, definitely let me know down in the comment section below. But past that, we'll be all good to go. This is my main portfolio and the one I had the most fun with, and also the one I make the most trades in. So right now, you can see we're sitting at a whopping $37,464.90. That's 90 cents, or that little bit of gain and loss right now is from crypto. Pretty much is going on a Saturday right now. So crypto, of course, is open 24/7. Stocks is only open Monday through Friday. You guys know the deal. Past that, though, we can check the past week. Past week, we're up about 4%, $1,436.46, now 34 cents. So fluctuating, like I said, of course. Past month, we're up over about 11%, which is great stuff, great news. Like I said, July was a great month to be invested in the stock market. $3,700, $3,715.71. Past 3 months, we're up a little bit, because like I said, we've been down for pretty much the whole year entirely except for July. So past 3 months, we're up about 0.33% or 123 bucks. And past year, we're still down a little bit on the past year, about 2,500 bucks. And all time, we're up about 15%, 14.31% of $4,689.48. If we scroll down, you can see my buying power right here is $91. This is probably the lowest amount of buying power I've had in my portfolio for a while because, like I said, I've been consistently buying as the stocks have been dropping lower. I believe in a lot of these companies in my portfolio, so I'm going to continuously buy some great companies at a cheaper price, and you should do the same. Past that, though, let's scroll on down. I don't have my option on Nokia in here anymore. I did sell that option. I profited about 40% on that option, so good stuff to see there. I made about like 200 bucks, nothing crazy, but it was a small option. But the point is, it's gone. Past that, though, we have my cryptocurrencies, but I don't really talk about too much because they're just on here just for me to move on over to my private ledger. So if you guys want to get a private ledger wallet and make sure your cryptocurrency is 100% safe, 100% secure, and you don't have to worry about pretty much a brokerage disappearing and you lose your crypto, then definitely get one of those. The link will be in the bio. But past all that, because I've been doing these plugs, let's get into the actual portfolio. The first stock on the list is ticker symbol AAPL, which of course is Apple. Apple right now is sitting at 162.15. They did pretty well on their earnings, not the best earnings, but overall, the stock price reacted good to it, so I'll take it. Past, let's see, so we scroll down, I have about almost 14 shares of Apple, overall up about 25%, and I have a recurring buy on Apple, $25 every single week. Of course, I'm going to continuously buy Apple. I love Apple as a company. I buy a lot of their products, so it only makes sense for me to buy their stock as well and hopefully grow with them as they grow. So, great stuff. Past Apple, we got ticker symbol at Msft. One of my favorite companies, of course, if you guys don't know, you know now. Microsoft sitting at $280.62 a share right now. If we scroll down on Microsoft, they're up, or at least I'm up on it, about 29% overall, and I have about 4.29 shares of Microsoft. Definitely plan to buy more Microsoft shares. Past Microsoft, we got ticker symbol AMZN, which of course stands for Amazon. Amazon is a new position that I put on my portfolio. It was previously on my public portfolio. I moved most of my positions from public on over to Robinhood simply because I wasn't getting on public as much, but here it is on Robinhood. 134.84 share. Amazon definitely did pretty great in their earnings as well. Not perfect earnings, but good enough where their AWS pretty much part of the company did pretty well, made them a lot of profits. So Amazon is up over the past week, as you can see here. If we scroll down, I have about 5.59 shares of Amazon, and I'm overall up about 35% with it. So just got into Amazon not too long ago, and I'm already up 35%. That's pretty crazy. It's only been about a month and a half. Wow, cool stuff. And of course, it's Amazon, so Why would it not go up? Past Amazon, we have ticker symbol TSLA, which is looking like it's going to make a push for $900 yet again. That is Tesla. And I have about 5.13 shares of Tesla, overall up about 56% with my Tesla shares. You guys know I'm a big Tesla fan as a big Elon fan. So honestly, I don't really plan on selling these Tesla shares at least until they get to around like $1,500, maybe $2,000 a share. Look, this is me being a super bull on Tesla. You know, you do what you want to do with Tesla. I'm just telling you what I do with Tesla. I really believe in the company, so I'm good on holding what I got right now. And also, I believe there is another stock split for Tesla coming. I believe I mentioned that in a previous video. We'll put it right there. But yeah, after that stock split, it should be about, I think I should have about 15 shares after that next stock split. So if you need to know all about that, like I said, the link will be up there for that video. Past that though, ticker symbol DGRO. This is a dividend and growth ETF. Finally making some uptick, some up gains, but of course, most of the shares in this particular ETF is stocks that were down over the first half of the year. So sitting at 50.60 a share right now. Overall, I have 103 shares of DGRO, and I'm overall down about 0.5%. So overall, getting back to the point and overall averaging down. So it works out best for me. And on top of that, I have a recurring buy on them for about $25 every single week. So of course, I'm gonna continue to buy DGRO. Another great option is SCHD, or you can get, I think, VYM, nice dividend ETFs to go ahead and grab in your portfolio to have it be somewhat of a backbone of your portfolio if you want it to be an option for you. Past that, we have ticker symbol JEPI. I ended up selling all my QYLD. So if you missed that video, check the video out. It'll be linked right up there. I explained everything in that video, but overall, this is my replacement for QYLD. And so far, it's been working out pretty well. I'm not gonna lie. JEPI stands for Jpmorgan Equity Premium Income, and it's sitting at 57.53 a share right now. We scroll down, I'm up about 3%. I have about 35 shares, and I definitely plan to buy more, hopefully to get to around 150, 200 shares as a goal, but obviously that's going to take some time. It's not that cheap. Past JEPI, we have ticker symbol BETZ. You guys know I bought this years ago. I honestly should have sold most of it when it was sitting around that $30 price point, but regardless, I think it's going to go back eventually. Not this year, maybe not, but overall maybe next year or the year after. I think it'll get back to that point and I can make some solid gains off of it. So right now, I'm consolidating just a bit. Either way, that stands for Roundhill Sports Betting and iGaming ETF. So of course, what it sounds like is exactly what it is. They invest in a lot of different sports betting and iGaming companies like casinos, like DraftKings, and stuff on those lines. Sitting at $15.69 a share right now. I have about 35 shares. Overall, I haven't bought any recently, so just holding on to what I got right now. But like I said, I'm down about 28% with this, so I definitely plan to add a little bit to the position just for fun. This is not something I'm going to hold on my position or in my portfolio long term, so nothing crazy to worry about, but it is on the portfolio for the time being. Past ticker symbol BETZ, we have ticker symbol O, and which stands for Realty Income. And Realty Income right now is sitting at $74 roughly. A great real estate investment trust to be invested into in the stock market. This has performed pretty well over the past year. Yeah, like I said, about 8% over the past year, which I think is great. 6% over the past 3 months. Past month, 7%. It's been doing pretty well compared to the rest of the market, which I'm very happy about. I wish it dipped, to be completely honest, just so I can get some more shares. I really don't want to buy at this high because it's been this high, like, it's been, let's see, January, right before the COVID crash, it was around $80 a share. So I really don't want to buy this high. I wish it dipped, but hey, it is what it is. If it keeps going up, I'm just going to have to go ahead and grab some regardless. But I think it's a great investment, a great real estate investment trust to be in almost everyone's portfolio if you're interested in those type of stocks. And if we scroll down, I'm up about 25% with very little, only about 12 shares, 11.69 shares right now. Past Realty Income, we got ticker symbol STAG, which took a mean hit, but definitely something I'm heavily investing into and definitely establishing a better position size on if I can, since the price is down so much since I personally originally bought it. Right now, it's sitting at $32.78 a share right now. We scrolled down on STAG or Stag Industrial. I have a dividend coming in on August 15th, and I have about 51 shares, 50.98 shares, overall down about 15%, and I have a recurring buy every single week for it of about $5. Like I said, I'm going to continuously buy this. Honestly, I think it's honestly a steal to buy it at this price at $32. Hasn't been around here in quite some time. A couple of years ago. Yeah, a couple of 2020. So yeah, definitely a great time to go ahead and stack up on this if you want to. Like I said, do your own research. I'm not telling you to buy it. I'm just saying I'm going to be buying more personally for myself. Past STAG, we got ticker symbol MPW or Medical Properties Trust, another real estate investment trust, sitting at $17.22 a share right now. Another big one in my portfolio that I do like. Overall, down about 3% with about 60 shares. Definitely with plans to buy more. Hopefully to get to about 120 shares on both of these stocks in particular. Past Medical Properties Trust, we have ticker symbol BA or Boeing. I haven't bought any Boeing stock since I originally invested into Boeing when the whole COVID crash happened. So I ended up getting Boeing for about $99 a share. And we scroll down, we can see that right here. 5 shares at $99 a share. Overall up about 59%. I haven't bought any since. And I do plan to, I'm just not focused on it right now. To be completely honest, like I said, I have a lot of stocks in my portfolio. I'm planning on cutting these stocks down over time. I don't want to just sell out on losing positions because I know I can make money off of some of these positions. So when I refocus and find that balance where I can go ahead and put more money into Boeing, I will. But for the time being, I'm simply not. I don't think Boeing's at a bad price right now. It's either Boeing or Airbus. Pick your poison. Or whatever you want to do. So yeah, past Boeing though, we got ticker symbol KO or Coke sitting at $64.17 a share right now. You guys know Coke's pretty solid. Nothing too crazy about Coke. Overall, it's going to be one of those stocks that'll probably be around forever. Either way, sitting at 12.67 shares of Coke. Overall up about 33% with plans just to keep, my dividends reinvested and just keep buying more over time. Past Coke, we got ticker symbol PG or Procter and Gamble. I believe they did miss their earnings. Let me check that. Yeah, but I believe they did miss their earnings. So they were sitting around 150. Now they're sitting around 139. Still at a great buy for Procter and Gamble. Procter and Gamble owns tons of different household name products, brands. So you're all good to go there. And I think I'm going to buy some more at this price point once I put some more money in my portfolio. Of course, Procter and Gamble, I'm sitting at 5.6 shares right now. Overall up still about 7% even after that recent downturn. And yeah, it's looking pretty good. I'll definitely be buying some more Procter & Gamble, and I got a dividend coming in on August 15th, which will get reinvested back into the stock as well to make me even more money on the next dividend payout. If you guys want to learn more about dividend stuff, I made a whole dividend portfolio tutorial video, so check the video out. It'll be linked right up there. Past Procter & Gamble, we got ticker symbol ALLY, which is Ally Financial. Now, these banking stocks have been taking a huge hit over the first half of this year because of the inflation, because of the unstableness of the economy, to be completely honest. And it sucks, to be completely honest, because I really like Ally Financial and I really like my next banking stock, but they've been taking both a major hit, so I got to deal with the losses for now, but I definitely need to add more to these positions because Ally Financial and the next stock I'm going to talk about, they're great companies. They'll be fine. They're not going anywhere. Ally, maybe, it would take a lot for Ally to go down, and the next stock, it's pretty much never going to go down. So overall, or go out of business, I should say. Either way, right now, I'm down about 14% on Ally Financial, about 20.5 shares. I think Ally Financial is Ally Bank, actually one of my favorite consumer banks to be a part of. It's only online. They have great high yield interest rates right now. So if you want to save some money and get I think around a 2% interest rate on your savings account, definitely go and put your money into Ally. Safe, it's insured, all that kind of good stuff. There's no crypto, nothing involved. Don't bother with that. But yeah, great savings account right now. Of course, since interest rates are going up, of course, the savings accounts rates are going up. So we'll talk about that in a future video because we haven't talked about that in a while because interest rates have been so low. Savings accounts have been that good. So yeah, either way, what I'm saying is I'm going to buy more Ally Financial stock in the very near future because it's so low. Past that, we got ticker symbol JPM or Jpmorgan Chase sitting at 115.52. Mind you, about a year ago, it wasn't around that. About a year ago, it was up around $170 a share. So this, to me, personally, is a great price to get Jpmorgan Chase at. And it's been hanging around this price for about a month now, I would say. Yeah, look, a past month, it only changed about 48 cents. Past 3 months, it's only changed about $4. So it's definitely consolidating right now. And once these banking stocks start to fly again, which they will eventually, you're gonna make some money. So Jpmorgan Chase, I think is a great spot to go ahead and pick up some more at this price point. And right now I'm down about 15% as well on this. So I'm adding more for sure. I'm adding more to both of these positions. They're great banks, and I want to be a part of it. Like I said, it doesn't have to be these banks. You can do whatever banks you want to do. You can be Bank of America, Wells Fargo. They're both solid companies to be invested into on the stock market. It'll make you solid gains over time. And on top of that, they'll pay you a nice dividend. So why not? Past that though, we have ticker symbol XOM, which is up in the 90s yet again. If you guys don't know, I actually ended up selling my Exxon Mobil stock, or at least half of it, back about a couple months ago. It was pushing over $100 a share. I think around $105, $106 a share. I ended up selling half of my position because I thought it was a good time to sell it. And I also wanted to take some profits pretty much off the table, put them into different stocks, and look at this. Yet again, we're going right back up, which makes perfect sense because gas prices are coming down slowly, are coming down. I think they're around $4 a gallon around here right now, which is solid. It used to be $5. But you know, Exxon is still making so much money. You know, you can't really argue with that. So, of course, with Exxon Mobil going up again, I'm just making more money, and I'm probably just going to hold on to what I have right here. I'm not going to sell any more of it. I already sold 10 shares. I'm going to hold on to my other 10.9 I have right here. And now all the dividends I get from this will be reinvested back into the stock as well. So, up over 100% again. Great stuff to see. Maybe we'll see. I don't think I'm going to sell any more of it unless it goes crazy, maybe to like $150 a share, which I definitely don't see happening. I'm just saying, I don't think it's going to $150 a share. That's pretty high. But past Exxon Mobil, we got ticker symbol Jpmorgan or KMI, sitting at $17.99 a share. I wish this did well, but this is natural gas. I mean, it's okay, but I wish it did like, you know, hit like 40, 50 bucks a share. That'd be great. So I can take some profits off the table, of course. But either way, you're going to get a nice dividend from this this natural gas stock. And on top of that, I have 51 shares, overall up about 3%, with plans to buy more. Not anytime soon. I need to focus on those banking stocks right now. So I want to get more of those. And I think I also want to grab more Aapl stocks. So focus on that right now. But this is definitely a solid option. And like I said, they're going to pay you a nice dividend. I think it's around 6%. Yeah, about 6% dividend yield right now. So cool stuff. Past that, we got Disney. As I told you guys, I like Disney stock under $100 a share. Disney ran up over the pandemic for no apparent reason. Don't really know why that happened. But regardless, they're down right now. We look at Disney over the past year. Look at Disney over the past year. They were up around $185 a share. Now they're at $106. I think it's a great time to get into some Disney stock. Like I said, I still like it under $100 a share, which it has dipped below that over the past month, I believe. Yep, 91. So yeah. I think at the time I just didn't have enough money to buy it. So it is what it is. But yeah, cool stuff with Disney stock. I think it's a nice little long-term position you could establish. And over the past 5 years, only up about 1%. So I think this is actually like, this could be a peak time to get some Disney stock. Who knows? Do your research. Past that, though, I have 6.99 shares of Disney, about 7 shares of Disney. And I'm overall down about 17% because I bought Disney around 127, or my average cost is about 127. So yeah. Past Disney, though, we got ticker symbol LOW or Lowe's. And I believe Lowe's and Home Depot also took a major hit because the housing market is actually starting to slow down quite a bit because interest rates are rising quite a bit. Of course, the Fed just announced the next interest rate hike of 75 basis points, which is about almost 1%. So pretty much interest rates on homes are going up. Interest rates maybe on your car loans, maybe credit cards, maybe. But mainly on homes are going up, so people are buying less homes because they can't afford to pay that interest. I can make a separate video talking about this, but overall, $191 a share right now. I believe over the past 3 months, yeah, it's not looking crazy. Over the past year, it's only down about 1%. But whoa, oh wow, okay, I just missed it. Okay, so in the beginning of January, yeah, beginning of this year, $255 a share. Wow, that's crazy. So yeah, I think it's a great time to grab some more. Overall, I'm still up about 8% with my position. I've been in Lowe's for quite a bit of time, 5.35 shares with plans to buy more. Not in any rush right this very moment because I got other focuses right now, but it's on the portfolio and it'll stay on the portfolio. Past Lowe's, we got ticker symbol WBA or Walgreens. Walgreens is sitting at $39.62 a share right now. I actually just made a video talking about Walgreens and CVS stock and which one of the two stocks I think is better as an investment right now. Overall, if you want to go ahead and watch that video, it'll be linked right up there, so go ahead and check that video out. But overall, you can see which one I have on my portfolio right now, which is Walgreens stock. And I actually did just pick up some more Walgreens stock. I bought about nine more shares, sitting at 29.9 shares, overall down about 6%, with plans to buy more Walgreens stock. I think Walgreens is in a perfect position right now. Even if they don't make any profits over the next 5 years, I think they'll still be okay as far as the stock price goes. I think it'll still naturally increase. So I'm not too worried about it at all. CVS, I'm not going to get into all the details, of course, but CVS, I think the stock price is just a little bit too high right now. So we're just going to stop it right there. If you want to learn more about that, the video will be right up here. I did a full breakdown on both of these stocks, their futures, everything like that. So check it out. Pretty solid video. I think it's about 15-20 minutes. So it's 15 minutes, the extra 5 minutes on the end, which is me yapping. So yeah. Past Walgreens stock, we got ticker symbol VZ. Verizon sitting at $46.16 a share right now. Verizon has been taking a beating. I believe they missed their earnings, and people honestly at this point don't believe in 5G anymore, which is understandable because, you know, it's not really performing what I guess as far as they thought it would. So yeah, Verizon is down about 17% over the past year. That definitely sucks. I still believe in 5G for the long term, but simply put, I think people aren't willing to wait that long, and a lot of people actually ended up selling the stock. If you scroll down on Verizon stock, I'm down about 12% with plans to buy more. And I think Verizon dividend right now is also around 5% as well. So yeah, Verizon, it's definitely going to stay on the portfolio. I'm not getting rid of it. I do like the company. They're still going to make money. Telecommunication right now is a rough space. Even T-Mobile, one of the best companies out here for a telecommunication stock, which is what I actually have my cell phone through, also took a nice hit as well. So T-Mobile, AT&T, Verizon, telecommunication is just a little bit hard right now, but I think things will change as times get better, pretty much. People aren't paying their phone bill as fast as they normally pay for because they have to pay for milk, which is an extra $2-3 maybe than what it used to be a year ago. So yeah, it's a lot of worries out here in the world, even though the stock market's looking up over the past month, but everything else really isn't. So you just gotta, we gotta get through it. Once we get through all these times, these stock prices will change, and I do believe in Verizon for the long term. Past Verizon stock, we have ticker symbol MAIN, or Main Street Capital. You guys know this is one of my dividend achievers on the portfolio, I guess you could say. They pay me a monthly dividend. Pretty solid. I've been just casually buying more stock every now and then. It's sitting at $44.50 a share right now. If we scroll down, I have about 35 shares. Overall up about 17% with plans just to casually buy some more. Past Main Street Capital, we got ticker symbol PSEC. Another one of those dividend achievers in the portfolio, sitting at $7.70 a share right now. They overall pay me about $7 every single month. They have not cut the dividend since I've been invested into them. I have not invested any more money in them since I originally invested what I invested. So I have about 120 shares, over up about 58%. I'm just riding those out, and that'll be about it for that. I'm not really too worried about it right now. Past Prospect Capital, we got ticker symbol BGS Foods, or B&G Foods, sitting at $24.71 a share right now. If we scroll down on B&G Foods, I believe I'm down. Yes, I am, about 16%. I am looking to replace this particular stock, but I wasn't willing to take a major loss on this stock. I believe I was down about 20-25% at one point in time. Now I'm only down about 15%, which is better, but I still don't think I'm willing to take that much of a loss, so we might hold it for a little bit longer. Either way, B&G Foods, they're paying me a dividend on August 1st, which will be reinvested back into the company. So even though I'm selling it, I'm going to have it reinvested because I don't know when I'm selling it, and I can go ahead and get this at a lower price point anyway. So I'm cool with it right now, but overall, I am looking for options, other food type of options to go ahead and reverse or replace it with, like Tyson's Foods or maybe something on those lines. So we'll see what happens as time goes on and as I do more research. Everything can change overnight. Past that, we got ticker symbol TGT. I initially just told you guys a couple months ago that I was going to establish a position on Target. So that's what I've been doing, establishing a position on Target. And Target has been all over the place. At least up 13% over the past month, down 30% over the past 3 months. So I'm happy I didn't just drop my $500,000 into Target stock, because I would have lost a lot of money, because I bought this about 2 months ago. And I believe I bought this before their earnings, so I definitely would have lost a lot of money. But like I said, I went into this position slow. I'm probably going to continuously add more to my Target position slow, because Target and Walmart, they also are in a position where, the inflation is eating into their profits. So, they might lose a little bit more money going forward throughout the rest of this year, and maybe even to early next year. We'll have to see. And with part of the economy doing well and the other part of the economy not doing that well, we really will have to wait and see what happens. So I'm cool with just establishing a slow position on Target. If you're doing the same thing with Target or Walmart, I'm just saying I think it's a valid way to go about it, instead of just dumping a whole bunch of money in and possibly losing even more. You can see these crazy dips are insane. So I'd rather not lose that much money off rip if I don't have to. So that's all I'm saying. I have about 1.1 shares of Target, overall down only about 3%. But if I went ahead, you can see obviously I have a recurring buy about $10 every single week. Now this position is very small, but I'm very happy. Like I said, if I put $1,000 in this, I'll have been down way more, because I'd have put $1,000 in about 2 months ago and probably be down about 15-20%. So I'm happy with this. When I find out it's the time to buy Target, I'm gonna buy some Target stock, and I'll dump a lot more money into it. Past Target though, we have ticker symbol COIN. One of the worst performing stocks in the portfolio, of course, is Coinbase, sitting at $62.14 a share right now. Coinbase was my fault in particular. I simply bought an IPO without even thinking. I bought into the hype. Stupid enough for me. Whatever, it is what it is. We all make mistakes out here. Bought into the hype, and here we are today, down about 75%. Overall, I have about 6 shares of Coinbase and about a market value of that of $374. You can see I'm down about $1,172 with this. You don't lose anything until you sell. Now, do I think Coinbase will go back up to $256 so I can make no profit off of it? I'll just break even? Maybe, but with crypto right now being that low, I don't think that's gonna happen unless Bitcoin really just takes off. And I mean, it's very possible that Bitcoin could do that, but it's very possible that Bitcoin could go down even further as well. So we'll just have to wait and see what happens. Regardless, I'm not taking that much of a loss with it. So I'll just hold what I got for right now. I don't care. It is what it is. Like I said, don't make the same mistake I did. Don't just buy these IPOs blindly because you're buying into hype. It'll get you in trouble. Sometimes it works, sometimes it doesn't. This time it didn't. Past that though, we got ticker symbol HOOD. I told you guys I was actually gonna sell this. Hood Markets or Robinhood Markets. I bought it for fun months ago when it first IPO'd. And only about 5 shares, luckily, thank God. And I'm down about 75% on this as well. 100 bucks, 130 bucks, I don't care. But I just bought it for fun, like I mentioned, I told you guys, and that's pretty much all I got to say about that. Past that, though, we got ticker symbol AVPT. You guys know, been talking about this stock, I feel like for 2 years now. I don't know how long it's been, but I still believe in this company. I'm not selling. I'm actually going to buy some more eventually. I just haven't gotten around to it yet. Sitting at 503 a share right now. Overall down about 60% or almost 1,900 bucks. Like I said, though, unlike Coinbase, I actually like this company. You know what I'm saying? Coinbase, I don't even know if I really like Coinbase. But this, I actually like AvePoint a lot. I believe in what they could offer to the future. I've talked about AvePoint previously, so I'm not going to talk about it again. But, yeah, I will be buying more shares as well because it's only $5. I definitely would try to buy it under $5 a share if you're interested after you do your research. Under $5 a share. If you want it, under $5 a share. Do not buy it over 5. But yeah, that's where I like it at. So we'll see what happens as time goes on with this. And I think that was it for the whole portfolio. And I believe, yes, that is it for the entire portfolio. So that's all I got to say. Like I said before, what a great month to be invested in the stock market because we've made some solid gains over the past month. And hopefully the rest of this year can prove to do just that. And we can get back to these points where we were at back in November, up 36%. We need to get back to those points. If we get back up there, of course, I'm going to be happy. But I'm going to be happy regardless. We're investing our money. We're making money passively. And I'll have that dividend video coming out. I'm going to record it actually right now. So that'll be out before this video. But yeah, that's all I got to say. If you guys are interested in more content like this, definitely let me know down in the comment section below. If you want to see any stock analysis in particular, I'm trying to get into that as well. So let me know down in the comment section below if you're interested in that and any other questions that you may have. Of course, let me know down in the comment section below. If you want to start your own portfolio, definitely sign up on Robinhood or sign up on any one of the platforms that you want to sign up on. If you sign up with the link down below, you'll get a free stock or a free cryptocurrency or free whatever. On top of that, get yourself a ledger for your crypto right here. There we go. Get yourself a ledger for your crypto. Protect your cryptocurrency because you do not want to hop on your exchange one day and you cannot sell your crypto because they can't afford to give it to you. So yeah, don't do that. And lastly, I think this is the last plug. Lastly, check out Seeking Alpha. That is one of my new channel partners as well as Ledger. Seeking Alpha will get you tons of different investment information to help you on your investment journey. And that's pretty much all I got to say. I'll talk about Seeking Alpha more as I go throughout all these different videos and content and such. So yeah, past that though, past all that, I'm out. Take care of yourselves. I hope you guys are doing great. So that's pretty much it. Stay safe, stay positive, stay hydrated. I'm out. Dollar Mike. Peace.